Hi all, welcome to today's live analysis session brought to you by IC Markets. Right, before we start, please take note of the disclaimer. Right, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also take note of the risk warning that comes with trading Forex and CFDs as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. Right. My name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we begin today's session, right before we dive into the charts on TradingView, just give me a sec. Just a bit better, sorry. Okay, before we dive into the charts of TradingView, let's take a quick look at the economic calendar and see what are the key events that are lined up for this week. Right, so we've got inflation data out of the US, we've got CPI data on the 12th of June. We've also got the FOMC statement and press conference by Chairman Jerome Powell on the 12th of June. Okay, wait, hang on. I believe CPI should be the 11th. Oh no, they're both on the 12th, right? Okay, they're both on the 12th. And then we've got the Bank of Japan releasing its monetary policy statement and delivering its press conference as well on 14th of June, Friday. Right, so it's quite a heavy week as well. We've got two central bank interest rate decisions as well as inflation data out of the US. Right, now this is the calendar for Forex Factory. And take note, I'm on GMT time here. So, right. So today is pretty much an empty calendar as well, right? We don't really have much going on today, but tomorrow we've got claimant count change out of the UK. So we're going to see the labor force report for the month of May being released. So that's going to be something to watch out for if you're trading the pound as well. And of course, we've got UK GDP data out on Wednesday, 12th of June, followed by CPI data, US CPI data at 12:30 p.m. GMT. And of course, we have the highly anticipated FOMC meeting that will conclude, and the statement will be released at 6 p.m. GMT time, followed by Chairman Jerome Powell's press conference at 6:30 p.m. We've also got PPI data out of the US on Thursday. This is producer price index, which measures the level of wholesale inflation. This is also another key metric to watch out for. And of course, we have the Bank of Japan releasing its monetary policy statement on Friday, 14th of June. Now, the Bank of Japan likes to keep markets guessing as to when they'll release the press statement and when Governor Kazuo Ueda will deliver his press conference. But generally, when looking at past events, the statement has always been released around or has been released between 3 and 4 a.m. GMT time, followed by the press conference, which usually follows 1 to 2 hours after. So take note, Bank of Japan does not give a fixed time or does not give a specified time as to when the statement will be released, but we can expect it to be to hit the news wires between 3 and 4 a.m. GMT. Now, looking at CPI data in the US, right, this is monthly CPI data. So on the left, I have the chart for headline CPI, and on the right, I have the chart for core. So after seeing an acceleration in CPI figures on a monthly basis for both the headline and core reading in the first quarter of 2024, we have started to see a slightly slower rate of increases for the month of March, right? We can see headline CPI dropping from 0.4 to 0.3% in March on a monthly basis, and the core reading dropping as well from 0.4 to 0.3% as well, right? So, and when we look at the forecast, right, we're expecting core CPI to remain unchanged at 0.3%, while we're expecting headline CPI to drop further, coming at 0.1%. So that means here, this chart on the left, we are expected to see headline CPI drop from 0.3% to 0.1%, while core CPI is expected to remain unchanged at 0.3% when looking at the monthly basis. So we are looking at potentially another, a second consecutive month of soft inflation data, right? And should we see that happen, right? Should we see that actually come in on Wednesday, it's quite likely going to cause dollar to lose some steam as well. right? So when you look at an annualized basis, on the left, I have the chart for headline CPI, and on the right, I have the chart for core CPI. Both core CPI has been trending lower or moderating lower over the past 12 months, whereas headline CPI actually accelerated in the first quarter of 2024, but now it looks to have resumed uh, the downward trend again. So we are also likely to see headline CPI continue to moderate lower, especially if the monthly figures come in line with the estimates or even lower than the estimates, right? So we may see another month of softer CPI readings in the US, and this is likely to cause the US dollar to lose steam. All right. Now, then we also have the FOMC meeting on the same day. So we see the Fed funds rate currently stands at 5.25 to 5.5%, right? This is where it currently stands. And they are, of course, as we all know, the Fed has a inflation target of 2% on an annualized basis. So while they are not going to raise interest rates anytime soon, they're likely to keep it at current levels for longer than intended to make sure that inflation continues to moderate lower. Now, especially if this week's data shows inflation continuing to moderate lower and in the following month as well, we may see the first rate cut take place in September. Right, for now, it's quite likely they're going to keep the Fed funds rate on hold at 5.25 to 5.5% at this week's meeting, regardless of whether inflation comes in soft or not. However, if inflation does come in soft, we could likely to see Chairman Jerome Powell adopt a more neutral outlook with regards to future monetary policy action. So take note, his press conference is also going to be critical because how he or the message that he conveys to the public is also going to drive the direction for, or is going to drive the demand for the US dollar. And of course, then that in turn would drive the direction for the dollar index. Right, when you look at GDP as well, GDP has started to slow in the US as well, with the first quarter reading coming in at 1.3%, which was much lower than the advanced estimate of 1.6%. Consumer spending has slowed significantly, and there was downward revision in the latest reading as well. But however, when you look at PMI activity, we've seen composite PMI activity reaccelerate in the month of May, jumping as high as 54.5 as well. This is the strongest increase in business activity since April 2022. So maybe Q1 is going to be a little bit sluggish in terms of economic activity, but perhaps we may see a slight rebound in the second quarter for GDP output. Right, then now that brings us over to the Bank of Japan, right? So where they finally raised their key policy rate from negative 0.1% up to 0.1%, right? So with the yen being weak as well, right? There's various inflationary factors as well for the depreciation of the yen, right? And this could is causing prices to rise, right? Domestic prices to rise, and that could warrant further interest rate hikes to take place. Now, for now, the forecast for this Friday is expecting the Bank of Japan to keep its policy rate on hold at 0.1%. So it does not seem that they are going to raise the interest rate at this meeting, right? So, however, what is going to be important once again will be the press conference by Governor Kazuo Ueda, right? How he communicates to the public is going to drive the demand for the yen as well. So do watch out. The yen could come under heavy selling pressure as well, especially if he adopts a much more neutral approach in his messaging, right? And if we see the yen sell off, then of course that would mean the currency pair dollar yen is going to surge on that day. Right, looking at inflation as well in Japan, where we can see headline inflation moderating lower in the first and so far in 2024, right? It hit a high of 2.8% year over year and is moderated lower to 2.5%. Similarly, for the core CPI reading as well, coming in at about 2.8% as well and dropping to as low as 2.2%. So inflation does continue to moderate lower. So that doesn't give any real impetus for the Bank of Japan to raise its interest rates once again. If you had seen inflation continue to accelerate in the beginning of the second quarter of this year, that would give a much more what do you call uh, reason for the BOJ to raise rates once again. But for now, with inflation continuing to moderate lower, there seems less likelihood of the Bank of Japan raising its rates once again. Right. And also we see composite PMI activity picking up strongly in 2024, and GDP activity so far over the last 3 quarters has been mixed as well. It's been relatively poor over the last 3 quarters, but with this sudden re-acceleration in composite PMI in 2024, we may see some improvement in Q2 numbers as well. All right, with that, now let's dive over into the charts and trading view and begin the analysis for today. Right, so here we are on the chart for the dollar index. Right, I'm currently on the daily time frame here, and we can see this strong candle here on the 7th of June. If we all remember, it was NFP day, and we saw a blowout number for the headline NFP reading with about 270,000 jobs being added versus the forecast of 185,000, right? So it's about, I think the forecast was about 182 or 185,000, and we saw 270 K reading as well. So let me just quickly verify that number. Right, there we go, right? So we had a forecast of 182,000 for the month of May, but we saw a blowout number of 272,000 for the headline reading. However, if you take a look at it closer, we saw the unemployment rate continue to edge up as well, going from 3.9% to 4.0%. However, that wasn't enough to stop the demand for the US dollar surging, which we can see has caused the dollar index to break above 105 and is trading around 105.25 today. And previously as well, I had highlighted this as the dollar index trading within a bearish channel as well, right? It was trading in a bearish channel since the 1st of May, and we see a nice clean break above this bearish channel. So we have a bullish breakout that took place last Friday, right? As the dollar index closed at about what did it close at? It closed at 104.93, right? And to give a indication of a potential bullish breakout, and we see that bullish momentum has continued very strongly today as well. Now, of course, where could be the next resistance level for the dollar index, right? I do see a nice overlap resistance level here. Oops, hang on, where's my line? Right, here we go. I see a nice overlap resistance level here at 105.57, right? We can see our dollar index previously finding support here on 25th of April till the 1st of May before finally dropping below this level, and as it retraced higher, it ran into resistance once again on the 8th and 9th of May before reversing to drop lower again. Right, so this is clearly a significant overlap level here, which has been identified as the first resistance. Now, we can also run a Fibonacci retracement here on this downtrend. So starting from this high on the 1st of May, oh wait, sorry, this is the high here, yep. This high, this swing high here on the 16th of April, going down to the absolute low, which is here on the 4th of June, right? When I look at the 61.8% Fibonacci retracement, I can see that it also aligns very well with this overlap resistance here, right? So this first resistance is going to be identified as the pivot, right? As the pivot for this week, and I think this is where the dollar index could potentially stall and maybe pull back a little bit, right? This is where it could potentially stall and make a slight pullback. Now, the first major resistance for the dollar index is simply going to be this swing high resistance here that has taken place on the 16th of April. Right, so what this pivot point also means is that should you have any long dollar index positions, right, if you've gone long on the dollar index since the non-farm payroll was released, right, or even perhaps at today's open, then your first take profit level should be identified at this pivot level here. Remember, this pivot level at 105.57 is a major overlap resistance level that has the presence of a 61.8% Fibonacci retracement. So this does look like to be a pretty strong potential resistance area, and your take profit for any long dollar positions should be typically identified around this region here. Right, now with regards to the first support, it's quite clearly going to be this pullback level here that has been in place since the 26th of March. We can see the dollar index bouncing off 104 several times, right? 26th of March, 4th of April, 9th and 10th April, even this swing low here on the 16th of May, as well as this double bottom here on 3rd of June and the 7th of June as well. So you can see a very significant pullback support level here at 104, which is going to be identified as the first support. Now we can expect dollar index to continue rising today and perhaps tomorrow as well. So once it reaches this pivot level here at around 105.57, that's where we can expect, I think, the dollar index to potentially stall. So this would mean identifying your take profit at the pivot level here would be a suitable zone to do so, or to is a suitable zone to identify your take profit level for any long dollar index positions. Now, of course, with dollar index rising sharply, we can expect currency pairs like the euro, the pound, and Aussie and Kiwi to be falling sharply as well. Right, so let's take a look at the euro and see how's that has been trading. Right, we did see the euro gap lower. Right, this is a big gap lower here today. The euro closed at about 1.0801 last Friday, and prior to that, right, I had identified this as an intermediate support level here, which actually just gave way, right? There was a clean break below this level here with the gap, right, and the euro continues to fall very strongly. Now, where I do see a pretty strong support level for the euro is at this overlap level here at 1.0740, which also has the presence of a 61.8% Fibonacci retracement, right? We can see that this retracement level here started from this swing low on 16th of April, going up to the high here on the 4th of June. We can see that this 61.8% Fibonacci retracement aligns quite close to the pivot as well. The pivot is a strong overlap support level where the euro has bounced, made a swing low support here or swing low bounce here on the 1st of April, after which running into resistance here on the 26th of April, and then after breaking higher in early May, it pulled back to find support at this level once again to bounce higher. So you can see how the euro has reacted off this level several times, and this is indeed a significant overlap level. So that's why the pivot has been identified, and this is a zone where I think the euro could stall as well. So right, so if you have been short the euro since last Friday, right, especially after the strong NFP report, and you've gone short on the euro since last Friday, or perhaps even at today's open, right, identifying your take profit zone for the short trade at around the region of the 61.8% Fibonacci retracement level is a suitable zone to identify, right? Remember, the zone around 61.8% at around the 61.8% Fibonacci retracement would be a suitable zone, a suitable level to identify your take profit for any short euro trades. Now, of course, first resistance is simply going to be this pullback level at 1.0904 that took place on the 3rd of June. And of course, the first support, right, is this is, I would say, another overlap level that also has the presence of a 78.6% Fibonacci retracement, right? We can see 78.6% Fibonacci retracement here, and we can also see the euro has made a nice pullback here on the 10th of November last year to bounce off 1.0664, and as it pulled back strongly, as it was falling strongly in mid-April, as it retraced higher, it ran into resistance here, creating an overlap, pulled back a little bit, finally breaking above, pulling back once again to find support at 1.0664 before finally bouncing higher. So we can see here the euro has reacted off this level here several times, making it a very significant overlap level, which is what we're using to identify as the first major support. Right, okay. So remember, if you've gone short on the euro since last Friday, especially after the blowout NFP numbers, right? Remember this support zone here where the pivot has been identified along with the 61.8% Fibonacci retracement is a suitable zone to identify your take profit for any short euro trades. Right, okay. Now with that, of course, we'll cover a couple of the majors. We'll cover commodities like gold and oil. And of course, should you have any other requests for any, if you have requests for any other currency pairs or the indices, do let me know and drop your request in the live chat box, and I'll be more than happy to go through the analysis with you. Right. With that, now let's move on over to gold. Let's take a look at gold. So, of course, if the dollar surged last Friday, right, typically gold prices will pull back as well. As we all know, gold and the dollar share a negative correlation or an inverse relationship. So that means when demand for the dollar surges, gold prices usually fall hard and vice versa. So this is what we saw exactly last Friday, right? So blowout NFP numbers cause demand for the dollar to surge, causing gold prices to pull back as well. But it wasn't only the strong NFP number that caused gold prices to pull back as well, because you can see NFPs were released at, if I were to go on UTC timing, I go to UTC timing, NFP was dropped at 12:30 p.m. GMT time. So that's here on this, or let me go to the 30-minute candle, sorry. NFPs were released at 12:30 p.m. GMT, so which is this vertical line here in purple, right? This is vertical line in purple, but you can see actually gold prices were actually tumbling since Friday morning 8 a.m. GMT time. Basically what happened here, there was news reports that the Central Bank of China had actually stopped buying gold, right? China's central bank, along with other major global central banks, were big buyers of gold throughout 2022 and 2023 and in 2024 as well. However, there was a news report that said that China's central bank had stopped buying gold temporarily due to a shortage of storage, right? Because the central banks, they don't buy uh, when they buy gold, they're actually buying physical gold, and naturally they need storage space, or they need sufficient ample storage space or vaults to store their holdings, right? So there was a report that was released at about 8 a.m. GMT time, which said China had temporarily stopped buying physical gold, which caused prices to tumble very sharply. And then that bearish momentum continued when we had the stronger than anticipated non-farm payrolls released at 12:30 p.m. GMT, right? Causing demand for the dollar to pick up very strongly, and at the same time, we see gold prices continue to fall even more. Now, when we look at the dollar index on the 30-minute time frame, you can see early in the morning there was not much reaction in the dollar index at around 8 a.m. GMT time. Where we finally saw the dollar come to life was when the non-farm payrolls was released. So you can see that, right, dollar only surged at 12:30 p.m. following the release of the non-farm payrolls, but gold had actually started falling from 8 a.m. Onwards, right? Okay, so that's just some background context onto what happened on Friday for gold prices. Now let's come back to the daily time frame and begin the analysis. Right, okay. So when I look across this level here at around 2284, I see a pretty decent pullback support level here, or even a swing low, right? When we look at the market structure for gold, it was rising higher, ran into resistance around $2,400 per ounce, pulled back, finding support around 2280 before bouncing higher again. So we see a nice swing low here that took place on the 1st of May. So this is where I'll be identifying my first support for gold. Right, we can see a nice swing low support that's taken place on the 1st of May at $2,285.17 per ounce. And once again, we can see gold prices have sort of stabilized above this level as well. So even not yesterday, but last Friday, as gold prices tumbled strongly, right, it did seem to find support just above this swing low here at 2,285, and for today as well, it looks to be holding up. So this first support is actually our pivot for this week, right? This is a key pivot here, and we have yet to see whether this level is going to be strong enough to see whether gold will experience a minor rebound of this level here. Now, with regards to resistance, we can see that this is a nice pullback resistance level that occurred on Thursday and Friday last week at around $2,378 per ounce. So this is where the first resistance has been identified. Now, similarly for gold, right, if you had been shorting gold since Friday, right, after seeing it tumble very strongly throughout the day on Friday, if you had been short gold, right, your first take profit level here should have been identified around the swing low support at 2,285, right? We can see this is a very significant swing low support level, and it is where price has indeed stalled for now. So remember, as gold prices were tumbling last Friday, and if you had done our analysis as well, you would have identified this swing low support which would have been used to identify your take profits level, right, for the short gold trade as well. Now we can also run a Fibonacci retracement starting from here. This swing low on the 14th of Feb going up to the all-time high on the 20th of May. Remember, take note, this level at $2,450 per ounce is the all-time high for gold, which was set on the 20th of May. Now, right, let's pull up all the fibs for the Fibonacci retracement, and we can see there's a presence of a 38.2% Fibonacci retracement level as well at where the pivot has been identified. Right, and with regards to the first support, I see a pretty nice overlap level here at 2,143. And this level also has the presence of a 61.8% Fibonacci retracement. So let's keep 38 and 61 and get rid of the rest. So we can see here as gold prices were rising back in November as well, it made a swing high resistance here on 4th of December before pulling back sharply. And then when it broke above this previous resistance here in the second week of March, it pulled back, consolidated above this level for about almost a period of 2 weeks before finally bouncing higher here. So we can see this is indeed a very significant overlap level that also has the presence of a 61.8% Fibonacci retracement. So that's where the first support for gold has been identified. Oh, hang on. Now, for now, gold seems to be stabilizing around this level here. So we may see gold potentially stage a rebound here. So take note of that. And also, if you have not already closed out any short gold positions, right? Remember, take note, this is indeed a strong swing low support for gold and where the pivot has been identified. So you can potentially identify your take profit level around the 38.2% Fibonacci retracement. All right, now let's take a look at crude oil. Right, so we can see since uh, 1st April or since the second week of April, crude prices have dropped significantly, and XTI USD is the instrument that tracks the WTI crude oil futures. So we can see after briefly coming close to $88 per barrel, prices have reversed strongly, dropping under $74 per barrel as well over this almost now 2-month period, right? 8-week period. It has dropped nearly, I think about 14%. However, we have seen a nice rebound since last Wednesday as well. However, I do see a strong potential overlap resistance at $76.53. So this level, this overlap resistance level, has been identified as the pivot for crude oil for this week. Right, we can see here crude oil finding support here in mid-Feb, third week of Feb, and even in early March before bouncing higher. And as prices were pulling back, we can argue, right, it found support around this level on the 8th of May, 15th of May, and then once again on 24th of May before finally giving way. And even last Friday, it's attempted to climb above this level here, but it failed to do so and pulled back, creating an overlap here. So previously, this level functioned as a pullback support level since 15th of February all the way till the 24th of May, after which it proceeded to function as an overlap resistance here. So that's how the pivot has been identified. Right, the pivot is actually an overlap resistance that also has the presence of a 23.6% Fibonacci retracement. So should we see crude prices come towards this level once again, it's quite likely it may stall around here and pull back a little bit. Right, so why this pivot is important is if you had gone long on crude oil last Wednesday and Thursday, right, going long on crude oil last Wednesday and Thursday, we would have identified this overlap level here or this pullback level here as a potential take profit zone, right? So you can see XTI USD hit a high of $76.45 per barrel before pulling back, right? So by identifying this overlap resistance, or rather this pullback resistance back then, right, we would have identified a suitable take profit level as crude prices rebounded in the second half of last week. Now, first support is quite clear, right? We see crude oil making a nice swing low rebound here on the 5th of February, and also we can argue here as well on the 4th of June it made a nice swing low here as well. So we see a very significant support level for the XTI USD at $72.31 per barrel, which also has the presence of a 78.6% Fibonacci retracement. Right, this retracement was found by starting the or this 78.6% was found by running the retracement from here, this swing low on the 13th of December, going up to the swing high on the 5th of April, and we can see that the 78.6% Fibonacci retracement also aligns very well with the swing low support here, or this multi-swing low support here, right? And resistance is identified at this overlap level at $80.89 per barrel, right? We can see crude oil finding nice support here in the third week of March, right? As it was rising strongly, it found nice support here before finally bouncing higher. And even we can argue here and middle in mid-April as prices pulled back and made a nice swing low here to retrace a little bit higher, right? So thus creating thus functioning as support once again before XTI USD finally broke under. After which this pullback support level then proceeded to function as resistance. We can see it attempting to climb above $80.89 on 10th of May, but it failed to do so. Tried it again on 20th of May, it failed once again. And for the third time as well on 29th of May, I tried to climb above this resistance level, but it failed and tumbled hard. Right, so you can see this very clearly, a significant overlap level here that has been identified in the first resistance and also has the presence of a 50% Fibonacci retracement. Right, so these are the main levels, support and resistance and pivot levels for XTI USD. And once again, should you be long on this instrument here, remember, take note, this overlap level at $76.53 is a pretty significant overlap resistance level. So this is a good place to identify any potential take profit zones for long crude oil positions here. All right, okay. Let's then, we've covered a few of the major currency pairs. We've covered crude and gold. Let's take a look at the indices, right? And of course, should you have any other requests, please do let me know in the live chat box. Drop your request in the live chat box, and I'll be more than happy to go through the analysis with you. Right, let's take a look at US 500. Right, this is the instrument that tracks the S&P 500 futures. And we can see that this index has made a, or this instrument has made an all-time high, a new all-time high back on Friday, right, 7th of June at 5,377.27. This is a new all-time high for this instrument here. And we see US 500 trading quite close to this zone once again. Right, so could we may see, for now it seems to be pulling back, right, but we do see a nice uptrend still intact, right? We still, if I were to draw, I think we even have a nice ascending trend line here. Up, there we go, a very nice ascending trend line for US 500. So we may see this instrument pull back and perhaps find support around or will find support at this ascending trend line before resuming the uptrend as well, right? So the bias for US 500 is to the upside, and should we see it break above this pivot here, right? This pivot is at 5,358.80. If we do see the US 500 break above this pivot here, then this bullish uptrend is likely to continue towards 5,500, which is a level that's been identified by the Fibonacci extension at 161%. And we can see this extension was found by running a retracement from here on 1st of April or 19th of April. This is, sorry, 1st of April down to the 19th of April, right? This is where the Fibonacci retracement was drawn. And that's how we use it to identify the extension levels at 127% and 161%. Right. Similarly, when we look at US Tech, right? US Tech is the instrument that tracks the Nasdaq 100 futures. Similarly, for this instrument as well, it made a new all-time high last Friday at 19,121. Right. So this is also maybe perhaps we have a potential bullish breakout for US Tech, but let's see. I do see a nice pullback support level here. And it's a pretty decent pullback support level here at 18,459, which I would identify as the pivot. Right. First resistance, right? First resistance for the US Tech would be at 19,055. And if I were to identify the second resistance, we can use Fibonacci extension to help us do that. To find those extension levels, we'll run a retracement starting from here. This high on 21st of March going down to the low on 19th of April. Key extension levels lie at 127 and 161%. We can already see that 127% has been surpassed, so let's not keep that anymore, it's not relevant. And we can see that the 161 extension level sits at 19,410. So this is where I would identify the second resistance for US Tech. Now, should we see US Tech consolidate or even pull back towards this pivot level here, and then if it should it bounce off this pivot level, the first target that you can identify for the long US Tech would be at this first resistance at 19,055. And should this index or this instrument continue to rise higher, you can then target the second resistance at the Fibonacci extension at 161.8%. So that's around the level of 19,400. Now, what about support? Right, we can use a Fibonacci retracement starting from here. This swing low on 19th of April going up to the all-time high. Let's pull up all the fibs. When I look across this level at 61.8%, I see a nice overlap level as well. So let me just keep 61.8%. And I'll show you this level here. There's a nice overlap level here that is now going to function as a potential support, right? We can see US Tech finding support at 17,800 several times from 28th of February till the 5th of April, after which it broke underneath this level, and as it retraced higher, it ran into resistance on the 29th of April, pulled back for a period of 2 to 3 days before finally breaking higher. So you can see this is quite very clearly a significant overlap level, which can function as a potential support and also has the presence of a 61.8% Fibonacci retracement. Right, so we could see US equity markets consolidate around current levels. If it does pull back, so for US Tech, this pivot at 18,459 would potentially be a nice support area for it to stabilize once again and then potentially bounce to resume the uptrend. And similarly for US Tech as well, I see a nice ascending trend line as well. And this trend line can also help us identify a potential support zone for US Tech. All right, okay. With that, we've covered a couple of the indices, commodities as well. Again, let's take a look at the Aussie and the Kiwi as well. We've still got a little bit of time, so let's take a look at the Aussie and Kiwi. Right, similarly, of course, if we see that surge in the dollar index, then of course currency pairs like the Aussie and Kiwi are going to dive hard as well, and this is what we saw last Friday. But it does seem like the Aussie has stabilized around this level of 65.75 and is sort of like consolidating just above this level here. So this pivot at 65.72 is identified as a pullback support level, right? It's identified as a pullback support level that also has the presence of a 38.2% Fibonacci retracement. Right, we see a 38.2 Fibonacci retracement. We also see a nice pullback that occurred on the 9th of May. Then, of course, as recently as today as well. So this is a nice pullback support level here for the Aussie. So this is where the pivot has been identified, and we could potentially see the Aussie consolidate around this level here. Perhaps maybe stage a minor rebound before resuming a downtrend. Right. In terms of resistance, there's a nice pullback resistance level at 66.93, which has been in place since the 15th of May. Right, it's nice pullback resistance level here. And finally, for support, there's a nice pullback that occurred here on right at the beginning of May for the Aussie before bouncing higher. Right. I believe there may also be a Fibonacci retracement that we could use around here. Let me see. I think that there is a Fibonacci retracement that should align well with the first support. Let me just take a quick look. Oh, okay, that's not actually. Yep, okay, that's not. That's fine. Let's just keep 38.2%. And let's see if there's anything else that I would like to highlight. No, probably not, right? So for now, the Aussie does seem to look to be consolidating here. So similarly, if you had gone short on the Aussie last Friday, especially after non-farm payrolls, right, and as it fell strongly last Friday and today at the beginning as well, remember it actually gapped a little bit lower and fell as low as 65.77, right? Right. By identifying this pivot level here, this support, this pullback support level, as well as the 38.2% Fibonacci retracement, this would have helped us identify a suitable take profit level for the short Aussie trade uh, for today as or well since last Friday, right? So take note, identifying support is key because it helps us identify suitable take profit levels, because that's where price usually does reach and stall around that region here. All right, okay, let's take a look at the Kiwi, right? Similarly for the Kiwi as well, we can see a nice pullback support for the Kiwi taking place on 22nd of May, and then again on 30th of May as well, before bouncing higher. So we can see 60.82 is indeed a significant pullback support level here, and this was also a resistance back on 11th or 10th of April, right? So swing high resistance was formed here on 11th of April, and then an overlap support was formed here. So this is highlighting a significant support zone, and also has the presence of a 38.2% Fibonacci retracement. So that's how this pivot has been identified, which is an overlap support level at 60.82 with the presence of a 38.2% Fibonacci retracement, right? So this retracement was found by running by starting from this swing low on 19th of April and ending with the high on 6th of June. So we can see that the overlap support at 60.82 has the presence of a 38.2%, and the pullback support at 59.97 has the presence of a 61.8% Fibonacci retracement. Right, so Kiwi could continue to drop a little bit lower, right? Maybe tonight or tomorrow, and it could finally hit this pivot level here as well. Right, so similarly, take note, right? If you had been short the Kiwi since last Friday, right? Identifying this support level here at around 60.82, right? Although it's not close to this pivot level yet, it's not it hasn't actually reached this pivot level, but identifying your take profit for the short trade around this level would be a suitable area as well. All right, okay, before uh we end today's webinar, right? I'm just going to launch a poll, and then we'll wrap up with another final analysis as well. Right, I just launch a poll. Truly appreciate if you guys can give your feedback, and then we'll wrap up the session with a final analysis. All right, okay. So we still have time, so let's continue with okay, let's take a look at the dollar yen. Right, we've got Bank of Japan lined up this week, this Friday as well. So you can see dollar yen has been in a nice strong uptrend. Right, we can see a swing low being formed here at the end of December. Another swing low here forming on the 11th of March. Even here, there's a nice swing low that occurred on 6th of May as well. So we can see this trend line has been respected pretty much. And even here, this pullback here that occurred last Thursday sort of found support just above the trend line, this ascending trend line as well. So we see a very significant ascending trend line for the dollar yen here. Right. We can see that after rebounding last Friday, right, the pivot at 158.29 is identified as a pullback resistance level, right? This is a strong resistance level that's been in place since the 26th of April, and even on 29th of May and 30th of May, as dollar yen was rising higher, it once again ran into resistance around this zone before finally pulling back. So this is a pretty significant pullback resistance level that has been identified as the pivot. And of course, the first resistance is the top of this wick here, which is at 160.34. First support very clear. This pullback level support has taken place on 15th of May, then again on last Wednesday as well, and it's also a level that has the presence of a 50% Fibonacci retracement. Right, this retracement was found by starting from here, this swing low on 3rd of May and ending with the pullback resistance on the 29th of May here, and we have the 50% Fibonacci retracement, which aligns very well with the pullback support level at 154.69. Right, okay. What else can we see? Right, maybe, let me see this. Maybe we can run a retracement from here. This swing low, 28th of December, going up to the high here. Let's pull up all the fibs. 338. Right. So if I were to identify a second support for dollar yen, that would be at this swing low that took place on the 3rd of May. Right. This is a very significant swing low support level. That also has the presence of a 38.2% Fibonacci retracement as well. Right. So right, so after dollar yen has bounced off this pullback support level here, especially with a strong rebound on strong surge on Friday, right? If you've got long on dollar yen, right, identifying your take profit level around this pivot zone here would be a suitable area. Take note, this is a strong resistance zone. So should you have any long dollar yen positions, identifying your take profit between 157.75 and 158.20 would be a suitable zone to identify your take profit for any long dollar yen positions. All right, okay, then let's take a look at pound. Let's take a look at pound. So similarly, we see the pound falling strongly today as well. And should you have, so once again, similar story. Should you be short on the pound or cable, right? Identifying your take profit level around the pivot of 1.2677 is a suitable area to do so. Why is that? We can see that this level here previously served as resistance back on 9th of April, after which it proceeded to function as support on the 24th of May and again on the 30th of May. So thus creating a significant overlap level here, which also has the presence of a 23.6% Fibonacci retracement. So it's quite likely the pound or the cable is likely to stall around this level here. So this would be a good area to exit any short positions that you may have for the cable here. Right, this 23.6% Fibonacci retracement was found by starting from this swing low on the 22nd of April and ending with the high on the 4th of June over here. Right, looking at first support, there's a nice pullback support level at 1.2561. Right, you can see the cable running the resistance here on 29th of April and then again on 7th of May as well. Of course, we see the wicks surging quite high here, but generally you can see this level has functioned as a pretty decent pullback resistance level. So now this could potentially function as support, and it also has the presence of a 50% Fibonacci retracement here. All right, this is what we have. All right, I think there's a projection that we can use as well, right? So we can start this projection from here, this swing high on the 8th of March, going down to the low here on 22nd of April, ending at 0.3. Let's look at all the projection levels. We can see that, okay, for now, 61.8% is at 1.2450, 78.6% is at the swing low here. Perhaps these projection levels are not useful at the present moment, but should we see cable continuing to fall even lower, that's when these projection levels could come in handy. But for now, we don't need them, so let's not incorporate it into our analysis for now. Right, okay, so that's what I have for cable. I think there was a pretty decent ascending trend line here for cable, which has finally been broken, right? We can see there's a nice ascending trend line here, and this trend line has finally been broken as well. I just like to highlight this fact that we had a bearish breakout through the ascending trend line, right, which gave a confirmation of further bearish momentum as well. All right, okay, we've come towards the end of today's webinar, right? Just before we wrap up, just want to run through the calendar with you guys once again. Take note, it's a pretty heavy calendar. We've got two central bank interest rate decisions, basically the Fed on Wednesday, 12th of June, and the Bank of Japan on, where's my, here we go, laser pointer. So we've got the Fed on 12th of June, Bank of Japan on Friday, 4th of June. We've also got US inflation data, specifically CPI data on the 12th and PPI data on the 13th. Plus, we've also got UK GDP data on Wednesday, and tomorrow we've got the labor force report out of the UK as well, which will involve claimant count change, average earnings index, as well as the unemployment rate. So pretty heavy calendar for the rest of for this week as well. All right, so thanks everyone for tuning in. Hope this has been a great session for all of you. Do look out for all upcoming webinars by IC Markets for the rest of this week. It's going to be a combination of educational topics as well as live analysis. All right, take care everyone. Thanks for tuning in and have a great trading week. Catch you all at the next webinar.